Hello. Thank you for joining us for this very special, important industry update. Welcome. With the ongoing challenges faced by the bicycle industry related to supply chain disruptions and inventory management, we are committed to providing valuable insights and updates to our members, retailers, and the industry at large. Today's webinar will address the current state of the industry's supply chain, its impact on retailers and suppliers, and potential paths forward. We are extremely thankful to Bob Margevicius, who has joined us today to deliver a candid overview of how the bicycle industry arrived at the present state. Bob will delve into the intricacies of the current inventory situation, shedding some light on the challenges and the opportunities that lie ahead. In addition, Bob will share his perspectives on potential strategies and solutions that can help the entire industry navigate these challenges. And finally, in conclusion, he will offer thoughts on possible paths forward and provide a glimpse into future expectations for the industry. I urge you to post your comments and questions in the chat, and following Bob's presentation, we are opening it up for a question and answer period. Bob, thank you once again for being here, for your support of not only the NBDA, but the industry at large. And with that, I'd like to turn it over to you.
Well, first of all, I want to thank you. It's a great honor to be presenting. I see there's a lot of people that are joining. Some of you may recall, I think the last time that I was doing a webinar that was actually related to the state of the industry was probably when I was in Taiwan about 2 years ago. And I was in the middle of quarantining for 75 days. So I'm back. And as you can see, I'm back in beautiful California. So anyway, I want to thank you and thank NBDA. And I hope that I'm able to provide some insights and guidance to everybody. So, and the floor will be open for questions. I've tried to put together a lot of information and a lot of guidance. And so, if you guys, everybody's okay, I'm just going to switch and I'll put on a PowerPoint and we'll talk our way through it. And by the way, Larry, thank you for your quick message. Okay. Let me know when we're up. We're good? Okay. All right, here we go. So let me just make sure I can switch here. Just making sure I can, let me just put that up again because I may not be able to, I'm having trouble switching from one to the next, one slide to the next, so. Yeah, not sure exactly why, but just let's chat and I will see whether I can fix whatever my issue is here.
As Bob works that out, I just want to let everyone know in attendance that we will have a recording of this presentation available on our YouTube channel 24 hours after today's presentation. So you can always share this with your teammates or rewatch segments of it if you wanted to have a more in-depth analysis of it following.
Let's see, let me just stop share. Let me just do this. I wanna, I'm not sure exactly why it's not shifting for me. So I may need to just close down for a minute and restart this. Okay, let's try. I'm going to try again. I apologize to everybody. I know we have a huge audience here. So let me.
Bob, as you work through that, I'll just note that it's so incredible to see so many people in attendance and so many people from even over on the other side of the pond. So many of our industry folks, such a large industry, yet we're so connected. And it's great to see so many people joining us and all the nice comments in the chat function.
Okay, let's see whether, let me know whether we are sharing here.
We have
How's that?
Over 200 people in the webinar right now, just to answer the questions that are coming in the chat. And Bob, your screen is sharing. Let's see how we work
Okay, are we good?
out. Yep, and just throw it into presenter mode. We should be good.
Okay, all right. I seem to be having difficulty shifting from one to the other. Okay, maybe it works now. Let's try it. And if not, we're going to go back to this screen. Okay, good. Okay, good. We're going.
Bob.
Okay, I love to start with this particular saying. Some of you may have heard it before, but it's an important, and particularly to myself and Heather, who are big runners. So yeah, the story is about a gazelle. And so every morning in Africa, a gazelle wakes up. And it knows that it must run faster than the fastest lion or it will die. And every morning, the lion wakes up and it knows that it must outrun the slowest gazelle or it will starve to death. So at the end of the day, it doesn't matter whether you're a lion or a gazelle. When the sun comes up, you better be running. So I'd like to start with that, just to give you an idea that that's where we're at. We've got to be running, and we've got to be running faster today than we were even a year or so ago. So what we're going to talk about today is just, first of all, I'm going to take some time with a lot of data. And again, I've said to Heather, some of this data I'm willing to share with everybody, but I'll give you some insights as to where we are today, what's happening today in the marketplace, some observations about the data and things that I see as I'm looking at it from an industry standpoint. What are some of the trends that we see going on from an industry standpoint? What's happening from the supply side? And what to do. So that's basically what we're going to go through. And I'm going to start out, this is going to be pretty intense. But let me start out by saying, where things are from an industry and from a sales side, from a pre-pandemic and now. And if you take a look at this graph, this will give you an indication. This starts in January of 2019. So pre-pandemic time, and you can see the greenish line that's there. That represents actual retail sales, and the grayish green area part of the matrix represents the retail inventory, and the orange red represents wholesale inventory. So you can see that pre-pandemic, you can see the amount of inventory of bikes that was on hand was somewhere around 1.5 million bikes that were on hand, and with about half of them being at retail and about half of them being at wholesale. And you can see where we are today. If you wanted to just know, what's the challenges that we face, there it is. That's the challenge that we have today. You can see that sales have somewhat gone back to close to a pandemic level through June of 2023. But you can see where the inventory levels are today. Inventory levels at retail are a little bit more than 500,000. So probably a reasonable, a little bit more than 900,000, pretty much a reasonable amount. And then you've got wholesale inventory that combined with retail inventory is over 2.4 million bikes. So that's a really good graphic picture of where we are today. And this second slide is just where we are from a retail standpoint from pre-pandemic to where we are now. And so you can see that pre-pandemic levels, retail was somewhere in the range of about $900, $1,100 to $900. and today it's pacing in the range of around 1,500 retail. So that's a pretty significant change over this period of time of about 40%. And what I am seeing as you look at the decline that's happening in June, some of that is represented by, we had some good sales in kids' bikes in the month of June. Also, there's a lot of discounting that's going on. I don't need to tell anybody the story about that, but so retail has definitely increased, and it's increased at a rapid pace relative to pre-pandemic levels. And we can talk more about why that is and what's happening, where that's going. And then I wanted to share with you where we are today. And there's two slides here that are going to be relevant. One, this one, and that little data graph that's underneath it has a lot of the details in it. But what it shows is what the units are, the bicycle units that are available and on hand in each of the different categories. So whether it's BMX, whether it's e-bikes, frames, comfort, mountain bike, or fitness bikes. And you can see again that gray color represents what's available at retail, and the orange color represents what's at wholesale. So for example, combined in kids' bikes, in children's bikes, is somewhere in the area of about 500,000 between wholesale and retail. And on mountain bikes, it's somewhere in the area of about 600,000. The yellow line that's there that you can see that represents what's the monthly average of sales, So you can see from the unit standpoint, on average over a 12-month period of time, that we have lots of inventory of lots of bikes in both channels. And the next slide I'm going to share is this one reflects a little different number. So it's comparable. So you can see this is units, but this is dollars. And the dollars actually are an important reflection of, I think, where we are today. And again, the categories are the same. So BMX, children, e-bikes, frames. And you can see from this graph where the dollars are actually tied up in both retail and at wholesale. So there's a lot of inventory in e-bikes. There's a lot of inventory in mountain bikes. There's a lot of inventory in road bikes. And take a look specifically at that road bike number, because what it's showing is that there's a lot of inventory on hand at retail, but there's not as much in road. And I can share with you later why that's the case, but there is a lot of inventory in road relative to at retail relative to wholesale. And you can see from the e-bike side and from the mountain side that there's a lot of gross dollar inventory at wholesale and less at retail. And I reflect on that a little bit to say that, and we will talk about this a little later about why these numbers are the way they are. And a lot of it just has to do with during the pandemic, we really weren't able to get a lot of road and road components, and they came in at a later point in time. And so a lot of that inventory has sold through to retail. And from the wholesale side, we're still struggling to try and get road components. So I'm going to take some time and just give you some observations from what I can see from this data. So this is IBD data. So, the fact is there's more than $2 billion worth of bike inventory between wholesale and retail at IBD costs. So that's estimated, I estimated at somewhere in the range of about 3.5 billion at retail. And just historically speaking, this is pre-pandemic, annual sales of bikes ran in the range of about 2.5 billion. So you can see there's a lot of inventory on hand, and that inventory that's on hand is going to last us a while. So currently there are 2.1 million bikes in stock, both at wholesale and retail, and estimated annual sales, again, based on pre-pandemic levels, was about 2 million with the data that I'm reporting. And I want to just clarify that point for a minute, because the information and the data that I have is, first of all, the retail data is based on the NPD data, which is based on a algorithm which shares information based on a select number of retailers, and it explodes it out. And from the wholesaler side, we think that we represent somewhere in the area of about 80% of the sales that are going into retail. And that 80% says that big brands, Specialized, Trek, Giant, Cannondale, all of us, a lot of brands are contributing to that, but we're not capturing a lot of the smaller brands that may be, I'll just say, pure play brands like a Pinarello or a Time or Cervelo that would also be in that number. So the estimates here are really based on comparing apples to apples, and I'm not calculating in the additional amounts that may be sold by other brands. So if you looked at it realistically, is the number of bikes in stock 2.1 million between wholesale and retail? Is probably not. It's probably closer to 2.4. Estimated annual sales somewhere between 2.4 and 2.6 million, probably. So, and as I said, average retail is up 40% to about $1,500 from $900 pre-pandemic. And these are somewhat frightening statistics, and that's that 218,000 less people bought bikes in the first 6 months of 2023 versus 2022. That's a pretty big number. And, we can talk about what that is, whether it's the economic conditions, whether it's weather, whatever things it may be attributed to, but it's a lot less bikes. And that number, that's 200 and the 2023 number, for the first 6 months of the year, just to give you a reflection, is 800,000 less than the first 6 months of 2020, which was during the pandemic. So it's a lot of bikes less. And you can look at it practically, as I say to many people, we've been through the golden years of bikes during the pandemic time, and today we're getting back to a more normal condition. So, and overall, if you look at it, the bicycle business is an ecosystem. So if there's less bikes that are sold, it does mean there's less component parts, accessories, helmets, and other things that are sold. So it is an ecosystem, and I'll go into some of those things in a little bit. So some more observations. So this is dollars retail sales are down 21% year to date. And as I said, unit sales are down about 19%. And the biggest unit sales drops are in comfort bikes, followed by fitness. Mountain and road are both down about 19%. And I want to just pause on that for a minute to just say, these are fairly significant drops, and we can all look at it and attribute it to, well, a lot of people are buying e-bikes, or, by the way, people are not buying high velocity bikes, but it's a big unit drop. And as I said, 218,000 bikes less is a large quantity for the first 6 months of the year. Some people may say, well, rest of market, including e-commerce, which is reported, is a factor. Well, that actually is not the case. So the rest of market, which does include e-commerce sales, is dollar sales are down by 21%, and that unit sales are down by 15%. So the biggest unit sales decline in rest of market is, again, comfort bikes, and it's followed, believe it or not, by e-bikes and then by fitness bikes. So it's the rest of the market is also suffering. It's not specifically just the IBDs. So e-bikes are now becoming an important part of our business. They represent about 10% of the unit sales and about 25% of the dollar sales. And again, I'm just making an observation about this, that we all anticipated that e-bike sales would be plus sales and that we would still be selling the same amount of bikes that we sold before, but we would just now add e-bikes into the product mix, and there would be as many stump jumpers as we sold in pre-e-bikes as now. But the fact is that people are buying e-bikes in place of buying traditional pedal bikes. And I'm going to talk a little bit about that in a little bit, but it really hasn't. E-bike sales have represented a plus from the gross dollar sales side, but they have not actually contributed to growing the size of the market and the quantity of bikes that are selling. So just again, observations from the month of June that retail sales have been declining due to a lot of discounting. And I find that just from my observations of looking at the data on a monthly basis, the retailers are selling through their inventory, and you're only ordering what's needed. And I find that to be just an interesting data point that I share with a lot of our people. And the reason why it's relevant is that from the retail side, you have a choice that you can buy what it is that you need to as a fill-in or make purchases of bikes. But from the wholesale side, from our side, and we'll get into the supply side in a little bit, we haven't had that luxury. And in many instances, from the wholesale side, we placed orders. We actually placed hard orders 730 or 365 days in advance that we weren't able to cancel. And so when you look at that wholesale inventory and you see the significant growth of the inventory from a wholesale side, it's really reflective of the fact that lead times were so long, and we all anticipated that this growth was going to be with us through the next 4 or 5 years, that we didn't have the ability to cancel. So we were obligated to take that inventory, those bikes that we had purchased. And so we've got them in inventory, and to be honest, there are a lot of them are still coming in. So, to some degree, I have to say, from the retail side, you're fortunate that you're able to order what it is that you need, and you're able to fill in, and that's the degree of your obligation. So, I'm sure that there's going to be a lot of questions about that one, but I'm going to move on and we'll talk about some other things. So this question came up of, what about sales, and where are unit sales and IBD sales for the rest of the market? So what's happening? So the left side is the unit sales, and the right side is the dollar sales. And I'm going to take you through this in this next talking slide, but you can see from the unit side, you can see from the bicycle side how small the number of bikes that are sold in the IBD is and how big the rest of the market is. Just, that's a quick graphic look at where sales are and what things are happening. And you can see in this, like areas like service, which is the 1, 2, 3, 4, fifth one on the right. The vast majority of the service is through independent retailers, and mass market is quite tiny. And where clothing is, again, you can see that from the IBD side, that sales are significantly higher than what's happening in the rest of the market. So what can I make of this? So in looking at it, so still, more than 85% of the unit sales are sold. So 85% of the total market sales are through rest of the market. And I want to clarify that by saying that 57% of the rest of the market unit sales are BMX and kids bikes. So that, even though that number of 85% seems to be quite significant, but the majority of that is still kids bikes. And as I mentioned, 52% of the total dollar sales are through IBDs. So even though the numbers look big from the unit side, the gross dollar side, IBDs are still winning in the game. And just digging down a little bit deeper, and I have a slide that reflects this, that more than 65% of the IBD's revenue is complete bike sales. Bike accessories are 6.3% of the total market, and 93% of that is through rest of market, bike accessories. And bike parts are 12.5% of the total market, with 60% through IBDs. Helmets, shoes, gloves are 7.7% of the total market. 64% is through rest of the market. Service is 4.9% of the market, total market, and 98% is through IBDs. And then clothing is 2.8%, and it's 72% through the rest of market. So I wanted to just carve out, the parts and accessory business. And I talked a little bit about this, and I know this graph is hard to read, so you'll be able to see it afterwards, but it's a reflection, again, of 3 different dimensions. The yellowish line is the months on hand. The gray line on the very bottom is sales, and the red color is the amount of inventory that's on hand. And you look, and the biggest amount of inventory, the one that's the sharpest, that goes up to 300 million, is components. That's a big area where there's a lot of parts. And you can see also that helmets, there's a lot of inventory. And I want to clarify this IBD sales and inventory. And let me go through this next slide because it's important. So there's no wholesale data available on parts and accessories that is being provided by NBDA or by any of the organizations. So I don't really know. So when I look at this chart here, that's a reflection exclusively at retail on what's available at retail and what the sales are. And just a guess is that there's at least the same amount of inventory at wholesale as at retail. So probably 2x what you're looking at here is probably what's on hand in the conjunction of, in the combination of both wholesale and retail. And just at retail, there's 1.1 billion on hand at retail value with annual sales of about 1 billion. And again, I want to reflect on the fact that this doesn't include wholesale data, so that might be close to 2 billion. Could be, I don't, not really sure. So there is lots of inventory on hand in many categories, like clothing has 20 months on hand. This is just at retail. Shoes, 13 months on hand. Components, 13 months on hand. Tires and tubes, 10 months. Wheel parts, 30 months on hand. And just again, some observations from my side. I see a lot of challenges in the parts and accessory category for a variety of reasons. And first of all, e-bikes today are coming pretty well equipped with a lot of accessories that were traditionally sold at retail. Today, e-bikes come with lights, locks, racks, fenders, kickstands, electronics. A lot of these things that traditionally were being sold through IBD as accessory items today are coming OEM equipped on e-bikes. That seems to be impacting the accessory business. And e-bike buyers are not buying high performance helmets, shoes, clothing, tires, cages, etc. Somebody walks into a bike store and they're buying an e-bike, they're not going to be looking for the lightest weight helmet when they're walking out of there with a 40-pound or 50-pound e-bike. And so that too seems to be impacting the sales, particularly of high performance products. And I just to pause on that for a minute to say, from what I see, that parts and accessory business is in a transition stage. And particularly as more e-bike buyers come in and bikes are better equipped, and these e-bike buyers are a different buyer because they're not buying all of these performance elements and performance products. And in many instances, if they're buying a helmet, they're not spending $300, they're spending $50 or $75. So, and the third point on that is that e-commerce sales, from what I can see, people are shopping e-commerce as a destination purchases. And many consumers, and you all know this very well, who come to brick and mortar retailers, you do a lot of impulse sales. People come in and they may want to buy a bike, but they're going to walk out with a helmet or shoes or tires or other things. But when you go onto an e-commerce site and you're looking to buy a tire, you're just buying a tire. You're not browsing through other things, and you're not making other impulse purchases. And I see that as one of the explanations as to why parts and accessory sales are not performing as well in conjunction to the number of bikes being sold and less people buying bikes. So it's an important inflection point as we look at e-commerce and where it represents sales, particularly from the parts and accessory side, just to realize that what's being delivered to that customer and how it's impacting your sales and how you're performing. And it does reflect on the fact that when you have someone in your store and they're buying something, look at the impulse purchases that they're making and try and fuel those impulse purchases. So, the bottom line is it's really necessary to just identify ways to capture more of that parts and accessory business. So, just what are some of the industry trends? I'm sorry I switched gears rather quickly here, but what are some of the industry trends? Share bikes and share scooters are certainly coming, and whether you look at them as being good or bad, they are promoting active mobility, and that's a really important thing. As many of you know, I also work with the United States Department of Trade and Department of Commerce, and our efforts are to try and promote physical activity and to promote mobility. So, share bikes and share scooters, they do promote active mobility. They keep cars off the road. And, they're really not taking away retail sales. And there is a growing ridership of people who are using share bikes and even converting into buyers of traditional pedal bikes or e-bikes. So that's a good thing. And I'm not necessarily encouraging that we embrace share bikes and all of us become share bikes or share scooter sellers, but just look at it from the positive side, that these are people that are now active in active mobility. And these are people that really can be converted into buyers. And I wanted to share with you just my perspective, again, Bob's perspective on where things are going, and particularly with e-bikes. So estimated growth in e-bikes is estimated somewhere in the pace of around 10% annually through 2030. And again, just this quick little matrix will give you an idea of just where I see things happening. E-transportation bikes with hub drive, I see them somewhere in the range of about 40%, somewhere in the range of 1,500 to 2,000. We see a lot of them. You guys know all the brands that are out there. Many of them are being sold consumer direct. So e-transportation I see as being a good opportunity area. E-cargo bikes are growing in popularity. In the European market today, they represent somewhere between 3 and 4% of all of the e-bikes that are sold, and they're quite expensive. You're looking at $5,000 to $15,000 in some instances for some of these cargo bikes, and many of them they're center drive, they're high quality, and they're really a lot of performance attributes that are based on low maintenance and trying to ensure that product is high quality and that it's dependable. E-leisure, you're starting to see some of these. I know that there was just a new Electra that was just released a couple of days ago with a hub drive. And I see that e-leisure in the area of somewhere about 7.5%, $2,000 to $3,500 range. And it's a good opportunity. E-sport, center drive, somewhere around $3,500 to $5,000. This would be from the specialized side. This might be a Como or a Levo center drive. It's a really big and popular and growing area of the marketplace. E-performance hub, we're going to see some hub drive, center drive, somewhere in the area of about 10.5%, and they're going to be $5,000 and up. E-mountain bikes, 15%, 4,000 and up, and we'll start to see some kids bikes. You've seen a few now. I expect them to be somewhere in the same range as e-transportation in the way that they're constructed, somewhere in the area of about 1,500 to 4,000. And just again, some other industry trends, customization. Core performance cyclists are buying customized, tailored bikes to themselves. And it's interesting, I hope everybody doesn't mind, but I'm living here in Santa Barbara, and it's interesting on my Saturday early morning rides that I go out, and I'm with all of my buddies. All of my buddies are out there today. They're riding small tubed steel or titanium bikes that they want to make sure that they have clearly differentiated themselves from the big tubed e-bikes, and they actually have gone more towards the simplicity of traditional pedal bikes and don't want any association with e-bikes, and it's interesting for me because from our side, and I think from the industry side, we want e-bikes to look closer to these performance bikes that these cyclists are buying. And so really the two sides are definitely they're opposite each other at this moment, and we've got two different groups of people that are out there trying to perform. And part and parcel to that is that customization is becoming important. A lot of these guys like little high-profile niche brands that are leading the way. And we're starting to see a lot of web rooming and showrooming as channel solutions. So, and from the channel side, I do see that e-bikes are being sold through retailers, and I think that that's and I'm going to get into that in a little bit on why I see that being the case. An e-bike service will become a much more important part of retail. Customer retention, warranty, customer service will all be formulas for success. And I want to pause because I'm going to touch on e-bike service again as I go through this. But I just want to share, everybody I'm sure here probably knows that I actually don't drive a car. I'm a hardcore cyclist, and I have an e-bike. And my e-bike actually, it needs service every 3 months. It really does. The brakes wear down. I need to have the chain lubed, and I take it over to a local retailer and I have those things done. But the reason why I want to pause on that for a minute was, as I say, it's probably one of the most and the biggest opportunity within the industry and within the market at this time, because and I'll share a little story with you. Some of you who have traveled over to Europe know that Decathlon is a very famous, and it's a destination spot for bicycle retailers. And just to give you a little the history of Decathlon, so in the 80s and in the 80s when mountain bikes were coming, in the European market, all the independent retailers in Europe, and particularly those in France and those in Germany, where the retailers were the retail operations were being run by former bike racers. So when someone came in and they wanted to buy a mountain bike, that proprietor of that shop wanted nothing to do with mountain bikes. They wanted everything to do with performance road bikes, and they kept trying to promote road bikes to that customer that came in. So the customer left, and Decathlon very cleverly captured this, and they said, what we're going to do, we're going to stock mountain bikes, and we're not going to stock road bikes. So Decathlon started in the mid 80s selling only mountain bikes, and they only had them one configuration, one color in white in every size. And it was amazing how successful they were. Amazing. They have since expanded, and they're kind of the sleeping giant in the European market. One third of all bikes in Europe are sold through Decathlon. And the message in that is, if you don't really see that opportunity and you don't acknowledge that it's an opportunity, someone else is going to take it. And I'm going to add to that just one other dimension, which is interesting. And again, I'm pretty familiar with the global market. In Germany, the automobile dealers are starting to do e-bike service. And it's a little bit of a trend that's happening, particularly in the German and the European market. And what's happened is the customer who has an e-bike, he wants it serviced. And during the pandemic, many of the retailers, whether it's particularly in Germany, wanted nothing to do with servicing an e-bike. They wanted to sell new bikes. So in many instances, they would take the bike and they would return it or give it or service it in 2 or 3 weeks when the customer wanted it right away. So the automobile companies have really caught on to this, and they've said, well, we can do e-bike service. It's not that difficult, and we're accustomed to servicing the customer in the way that they should be serviced. So today you can go to Germany, and in some of the auto repair centers and automobile dealers, you can take your bike, you make an appointment, you sit in that comfortable lounge area that you guys are familiar with the TV and the internet and the coffee and the donuts, and they wait 2 or 3 hours, and for $100 or $150, they're out with their e-bike already serviced. And that's the kind of service that people want. And e-bikes really do lend themselves to that. And I just say that we have to, as an industry, we have to look at that aspect of it, and we have to really embrace it. And my last story on this subject is, as I said, I'm working for the USTR, and I guess it was several years ago. I asked at the Department of Commerce. I said, what we in the bike industry we want to do is we want to know what we can do to grow our business and grow the amount of people riding bikes. And I said, what is the automobile industry? How do they manage this? And the Secretary of Commerce, her name is Penny Pritzker, she said, let me tell you about the automobile industry. She said, the automobile industry in the United States sells 16 million cars, plus or minus 2 million every year. And they have been forever. And I look at the bike industry and see the same. And she said, the automobile industry suddenly realized that the industry is not going to grow from 16 or 18 million up to 40. It's going to stay at 16 or 18 million. And what they want to do is they want to promote the concept of people using cars and driving and encouraging repairs and maintenance. And that's what the automobile industry is looking very carefully at. And that's a lot of the profits that are fueled from the automobile industry come from repairs and maintenance. And we can learn a lot from that. We really can. And I think that as an industry with e-bikes, it lends itself well to that. When people are spending $3,000 or $4,000, yeah, they can spend $100 or $150 on a semi-annual checkup or maintenance. It's the right thing. And I think that we've got to, as an industry, we've got to look carefully at that. So, okay, good. Other industry trends, kids, we need to be, there's lots of school programs, parents, children's activities. There's a renewed interest in BMX and freestyle. About 4 weeks ago, I was at the U.S. Olympic office in Lausanne, and the president of the Olympic Committee said that one of the big drives now for both the Olympic Committee and also the World Health Organization is to promote physical activity. And physical activity starts with kids, And so we need to continue to promote physical activity through various programs. And I will get into this a little bit. We can't be focused on selling and promoting high value bikes. We need kids, we need those high velocity bikes, we need people riding bikes because they're our future. Safety, education's really necessary. And, as some of the people who were here when we were at the CPSC meeting just 2 or 3 weeks ago, education, consumer education on both safety, on e-bike use, on battery care, battery maintenance, riding practices, how youth are riding bikes, all of those things. We need to really take time, and we need to provide education so that the product is safe and people are encouraged by it. So I'm going to switch gears again. I know I'm kind of running into some time, but I'm going to give you, a little bit of what's happening from the supply side dynamics. As many of you know, I just got back from Asia about 2 weeks ago, and actually I'm leaving on Sunday again. And it was because Heather didn't want me doing a presentation from Taiwan that I'm doing it now. So what's happening from the supply side? So lead times are now back to pre-pandemic level. And as I said, this is really a great thing because we have seen that 730-day lead time. That really put a lot of pressure on the brands to be buying things. So it's good to see that lead times are back to pre-pandemic levels. We're moving back to a demand-driven market. So during the pandemic and over the past 2 years, we've really been in a supply-driven market. And as you know, it's just whatever supply comes in is what you sell through. And during this demand-driven market, it's going to be tougher. It means that we're going to have to go out there and we're going to have to drive demand, and we're going to have to bring customers in. So that's a change in how we operate. And I do think that it's going to put pressure on both sales and margins. Inventory levels are at an all-time high, as I said, over 14 months on hand in the channel. And some things to just look at and expect: the Section 301 exemptions that are on kids' bikes and e-bikes, they'll expire on September 30th, 2023. So just in about a month and a half. And we're uncertain what that means, but if the exemptions are not renewed, it'll add 25% additional import tariff to kids' bikes, which is 24-inch wheel and below, and e-bikes, which have both been on exemptions. And I touched a little bit on this, that many brands are really focused on high-valued and performance bikes. I hope that we continue to press on kids' bikes and high-velocity bikes. The manufacturing cluster is moving to Southeast Asia, which is Vietnam, Cambodia, and a lot of that is in place of China for a variety of reasons. As everybody knows, we've got the Section 301 tariffs from China. Europe has anti-dumping on both pedal bikes and e-bikes. So the manufacturing cluster is moving out of Asia, and it's moving to Southeast Asia. Taiwan's a good place. We're still producing a lot of bikes in Taiwan, but there are a lot of limitations on capacity, and labor costs are increasing in these countries. So we're seeing a movement to Southeast Asia. There's lots of capacity now and component availability in Asia. So with the slowdown in purchases that people have made, and with the big inventory levels, there's a lot of capacity. One of the things that I get concerned about, particularly as we look at capacity and component availability, is during this time when things are really slow, a lot of the component suppliers and the assemblers are now looking at adjacent industries to service. So in my travels to Asia, when you talk to a supplier, whether it's a handlebar, stem, or a saddle maker, they're looking to other industries that they can service. And because historically they've been very dependent on the bike business exclusively for their income and revenue streams, so now they're starting to look beyond the bike industry into other industries where they can diversify their customer base. And I see that as kind of a problem, particularly with some of the good component suppliers. And it's just some more just tidbits of information for Europe. E-bike sales now are, 10 times as big as the US, which I see as being a really big opportunity for here in the United States if we can start getting as excited and enthusiastic. So e-bike sales in Europe are between 7 and 8 million bikes a year. And it's surprising to me that 80% of all e-bikes in Europe are assembled locally in the European community. And that too is also a big change where historically the majority of bikes have been assembled in Asia, or they've been much more dependent on Asia for supply side. Today, really, there's a big focus on sustainability and climate control. And a lot of this is coming out of the European community that's so now focused on sustainability. In my discussions with the European suppliers or European brands, the first subject that always comes up is sustainability. And tell us about your scope 1, scope 2, scope 3 emissions. So, and just you can count on that being something that's going to become more and more important as the days go on, and whether it's looking at what's just happened in Hawaii or in other parts of the United States, but sustainability and climate control are becoming more and more important. We've seen a few good things that are happening. Ocean freight costs are now close to pre-pandemic levels. We were looking at ocean freight costs that were over $20,000 a container. We're back to somewhere in the area of about $2,500 to $3,000 for a ocean freight, which is good. I don't know how long that's going to last. And the US dollar has strengthened against most currencies. So US dollar today is trading somewhere in the area of 30, almost 32 NT to the dollar. And a year ago, it was trading at 30.5. And the Chinese renminbi today is trading at 7.26. It was somewhere in the area of about 6.5 a year ago. So that's a positive side from the purchasing side. But on the flip side, we are seeing material costs on the rise and labor costs on the rise. Almost done, guys. So what do I do? Okay, and how do I go from here? And what are some thoughts from Bob on the future? So I think that first and the most critical thing that we have to do is we have to start rebuilding mutual trust between ourselves, suppliers, and our customers. We have to depend on each other. For many years prior to the pre-pandemic, we had a good trust level, and that really has been broken during the pandemic with supply and with all of the actions that have gone on. So I think rebuilding mutual trust is really important between us and IBDs, and even between the IBDs and your consumers. Take time. If you commit to something, honor it. That's going to help rebuilding that mutual trust. Be accountable for your decisions and try and make sure that that decision that you make, you're willing to stand by it. And even with your customers and with your suppliers, be open and transparent. Try and share whatever information you have, because we're in this situation because of the challenges that we just didn't do a lot of open communication between all of us. Sorry. And let me just hold on here. Sorry, I'm sorry about that. Okay, so for some reason, okay. So and don't let opportunity find you. Find the opportunity and embrace it. And I spent a lot of time on this, that e-bike service is where the big profit opportunity is. Try and be active in getting more people buying and using e-bikes. I think that that'll be an important thing going forward. A few things just going forward, because these are important, is, what's happening with D2C. And, the important thing to recognize about D2C customers is, they want to shop when they want to shop, where they want to shop, and how they want to shop. And it's important to be there in fulfilling those needs. So, D2C shoppers, customers, they do want to shop 24/7. And you've got to be there for them. You really have to be there for them. And, look to brands about potentially being fulfillment centers, locations for them. That too is, I think, an important element. And go out and learn from the best in class of D2C brands. There's some of these brands that have been selling consumer direct for years, and they've really, they've perfected the art of not only customer service, but they've perfected the art of customer interaction, packaging, and dealing and managing those customers. So look to those guys and try and learn from them, because they really have done a great job, and many of them are quite good at their businesses and the way that they're managing. Be passionate and a champion for bikes and e-bikes in your communities and in everything you do. And try and convert everyone you're in contact with to move away from combustion engine vehicles. And I'm a strong advocate of that, and I do that virtually every day. Success is 99% attitude, so make sure that you believe that things can change and that you can make a difference. Be world-class in your service and customer care. And again, it comes back to whether it's a D2C brand or whether it's service or how you manage that business. And remember today, we're in a different environment today, and speed is the new currency. So make sure that you're able to appeal and attract to those customers. So this is my last slide, and I'm just going to leave you guys with this. So, just some parting wisdom from Bob, and I hope I try and exude these elements. But be humble, be honest, transparent, and authentic in everything you do. Just that's important. Respect the customers are always right, whether you like it or not. That's the way that customers want to be treated today. Respond and resolve issues immediately. Seek perfection in each customer transaction. Embrace and be really proactive with social media. People are engaging in social media, and be active. Manage your customer reviews to protect your business and your brand. Constantly adopt and adjust to the changing behavior. Try and invest in technology to simplify transactions. Embrace and respond quickly to customer feedback. Adopt a missionary attitude and avoid mercenary actions. I love that one myself. Recognize and reward outstanding behavior. Learn, unlearn, and then relearn again. That's an important thing. And then lastly, innovate, and just innovate more. And my last thing that some of you may have heard, and I again thank everybody for participating in this, is, if you're not at the table, you're on the menu. So try and adapt some of these behavior patterns and try and be the one that's preparing the meal and not you being the meal. So, so that's it for me. I want to thank everybody again for the opportunity to share and to learn and to experience. And I see there's a lot of comments, but I don't know how much time we have, Heather. You're the one.
Yeah, thank you, Bob. This has been very informative. I appreciate everyone's comments. We are going to allow some time to answer some of the questions. I know Rochelle has been keeping track of some ones that we wanted to just take this moment to ask. So while you're here, if it's okay for you, we'll just go ahead and we'll dive through a couple questions here.
Absolutely.
Okay, we'll turn it over to Rochelle. Thank you.
Perfect. We do have a lot of questions, so I'm going to try to get to as many as we can in the time. Bob, you said previously that you're willing to, if we can't get to any on air today, that you'll be willing to answer them via email. So thank you so much for that.
Yes.
First question is about the data in your first couple slides.
Yes.
They want to know if the e-bike numbers included the internet or D2C companies.
No.
Okay.
The first two slides that I presented were exclusively IBD, and they do not include rest of market. And just let me expound on that for a little bit. It's difficult to get the rest of the market data. Most of the rest of the market data is accumulated through Amazon and through a variety of other rest of market sources, but it does not include companies or brands that are selling through the internet directly themselves. And we have no way of accounting for those.
Thank you. Here's a fun one. What bicycle do you currently find yourself riding the most?
Oh my goodness, that's such a good question. So I should take everybody out into the garage and see the whole stable of bikes, but I'm riding a Vado around town. I will say I do ride with a helmet, and I do, it is one of the fast ones. And my weekend rides are on a Roubaix. So that's it. I'm not into speed anymore. I've given that up several years ago.
Excellent. All right, next question is about the e-commerce destination concept that you mentioned. They want to know, is there data to support that concept? Especially with many digital strategies, impulse can be pushed to a degree. Would be interested to know from a vendor side what degree this difference could be.
Yeah, I don't have any firm data to talk about it, other than I have a wife who is a destination purchaser, and most of the people that I do talk to who are purchasing on the internet, it is a destination purchase. They want something, they go to an internet site and they buy it. And I agree that share of pocket is an important aspect to the business model. And you know, you can see how Amazon works that, where they have, you know, recommended products with your purchase. I don't see a lot of that on some of the sites that retailers have. So perhaps maybe that's a way to try and fuel a lot more impulse purchases than we're seeing. But it's just maybe gut instinct on impulse versus destination purchases.
Next question. With downward pressure from consumers, do you anticipate that brands will be forced to lower MSRPs? And if so, will costs come down, or will these reductions come at the cost of retailer margin?
Wow, that's a good question. I have to say, I don't really know the answer to that right now. What I can say is, as the guy who's going overseas and trying to negotiate costs, that prices and costs are not going down for the finished products that we're buying. If anything, they're going up. And the positive side on it happens to be the exchange rate and the ocean freight that are giving us some benefit. But and again, just, you know, Bob's observation, I think that the golden years of high margins are probably behind us, and I think we're going to be back to margin structures that are probably pre-pandemic level. But again, that's just my observation, and I really can't comment on MSRPs. I think that's brand specific, and I think that that's something that companies themselves are deciding.
What are the big brands doing to stem the excess inventory across the industry?
Wow, you guys know better than I on that. I mean, it's amazing, just the discounts and the deals and the things that are happening, and we see it all around us. So I think everybody's scrambling to try and sell through the inventory that they have. And my quick observation is, as I look at the inventory numbers, both at wholesale and retail, I just question whether there's that much equity in this industry and in this business to be able to support a lot of that, a lot of the inventory that's out there. And inventory, as you know, is only one part of it. Got inventory and accounts receivable. So it's a lot of there's a lot of cash that's right now tied up between inventory and accounts receivable. And I think I've said this to many people that a year or a year and a half ago, cash was trash and nobody cared about having a lot of inventory. But today cash is king, and today you want to have as little inventory as possible and as much cash as possible.
We have a little bit of a follow-up to that question. If to what extent it is the surplus inventory a significant issue for major brands? Do you think any of them are in danger of facing closures due to the excess inventory?
Oh, I don't know. I am not sure about that. So I can't really answer that. And I think the interesting part about that is that during the pandemic, a lot of people made a lot. I mean, it was a good, profitable time for a lot of brands and a lot of businesses and a lot of retailers. So I think a lot of them probably preserved that. So there may be a lot of equity out there that can be able to support it, but I don't have an answer for that.
Our next question is, what are your thoughts on how speed pedelecs will capture e-bike share in the next 5 years?
So I guess the question is whether, class 1, class 2, or class 3. What at least I'm seeing from the marketplace, and as I said, I live in Santa Barbara here, I'm seeing a lot more people that are riding on class 2 bikes, a lot of kids, a lot of youth, and a lot of I don't necessarily I'll just say low income, or workers who are maybe don't have another mode of transportation. I see a lot of them riding around in my community here, commuting back and forth. And so I see that area as a big area of growth and a good area of opportunity to capture. And I am finding a lot of the e-bikes, the sport, recreation, and performance, people are treating them a lot like a traditional bike, in that they are using it maybe once a week or maybe once a month, and they're mostly parking them in the garage. And what we really want to see is we want to see more people out riding them for commuting and for errands and local transportation needs. And I do think that we're going to see a lot more of that, of those bikes as an opportunity, because they're priced in the $1,000, $1,500, $2,000 price range.
Thank you, Bob. We have a bunch more questions coming in, so we'll have to cut it off at some point. But like we said, we're going to get every question answered, just some of them may be over email instead of live on the webinar. So just to let you know, thank you for all your questions. When do you think we will see peak discounting in the industry?
Wow, well, it's a good question. We're going into the slower months. Historically, September through February or March are the slower part of the season. We see a little bit of a peak, and we see a little bit of a bump in September based on, kids going back to school and things. But um, you know, it's again, that's questions really dependent on the company and the brand and their equity position, and how they're going to treat the inventory they have, and how they're going to dispose of it. And I have no idea on that. That's brand specific or company specific, and I can't even think about addressing that.
This question is, how can we build e-bike sales like the numbers in Europe without the infrastructure that they have?
But I think that there's going to be some strong momentum. As everybody knows, we're working on the E-Bike Act that's been that right now is being promoted by Blumenauer. There's a lot of local incentives that are going on within local communities, whether it's Santa Cruz or whether it's Boulder or whether it's here in California. So I think that some of it is going to come from actually the incentivizing people to ride bikes. And I'm just going to kind of deviate here for a little bit, in that the infrastructure, building infrastructure is a matter of local communities. So the way that the federal government works from the funding side is that the federal government funds transportation funds for alternate modes of transportation or use other than fossil fuel vehicles or automobiles. And that money gets parceled off into 51 different sections, the District of Columbia being one of them. And it goes individually to the states. And the states are the ones who have the authority to delegate what that money is used for, and whether it's used for infrastructure. So what everyone can do who's still on part of this call is to work with your local communities and have your local communities work with the state government to get some of that funding to build infrastructure within each of your individual communities. It's generally not a federal mandated thing, and it is local. And as I said, I'm living here in Santa Barbara, and we're very active in trying to get money from the state to build infrastructure here and to ensure that roads are that there is safe places for people to ride. But it really happens from the ground up. It's not a top-down initiative. It's definitely bottoms up. And that's really what we have to do. We have to bottoms up. All of us have to be active and aggressive and work with our communities and work on getting that funding from the state. And People for Bikes and the League of American Wheelmen and other organizations are actually out there to help, and they can provide guidance on how to do that. But that's where we need to go, and that's how we need to go about doing it. It's going to take an army, but it's going to take a really dedicated army.
Thank you, Bob. Next question is, why did we end up with such a component and helmet surplus? And in your mind, how can we get beyond the surplus and then close it down?
Well, I think that a lot of the inventory came about from basically, these long lead times, and the long lead times provided the latitude for people to, it obligated them to just purchase. And so I think that that's what drove a lot of the inventory into the channel. I have to say, struggling with the question on what to do, because it's, I've been watching this now myself for 2 years, and, I'm continuing to watch that, there are sales, and sales are happening in those components and helmets and other areas, but it's not at the pace that it was pre-pandemic or even pre-e-bike. So, we're just going to have to work our way through it. I think that's the only solution.
Thank you so much. I do know that we have more questions to be answered, but I think we're going to shut it down there so that we can give everybody their rest of their day back, especially you, Bob. So thank you so much for being here. We really appreciate it. Again, any questions that weren't answered are going to be emailed to Heather and Bob, and we'll make sure to get those questions answered. So thank you, everybody, for being here.
Great, guys. Thanks again. I appreciate the honor of being here.
Thank you, Bob. Thank you,
All
everyone,
right.
for attending.
All right. See you.
Yeah.